So this is our format of cash flow system. Cash flow statement. So cash flow statement is a statement of transaction which made on cash. So there are three activities. First one is operating activities. Operating activities means, you know, that operating activities any work related with the production, or any work related with the objectives. So this is called operating activities. যদি কোনো কোম্পানিতে প্রোডাকশন হয় বা যে কোনো কোম্পানি, যে কোনো প্রতিষ্ঠানের যেটা উদ্দেশ্য, যে কাজটা করার উদ্দেশ্য, অ্যাজ এ এক্সাম্পল উবের, the transport company Uber has more perspectively. They have an objective of serving the transport system quite special other than the transport or cab companies. So they have another objectives to as much as they can, they spend their service to the customer. So Uber is the most delighted transport company. So this is the objectives of the company. So any work related with the objectives, that is called operating activities. So operating activities start from net profit before appropriation. Appropriation means, you know, that appropriation, there have a chapter in 12th standard. So after the 12th, I think there are the syllabus of graduation having no coverage of regarding about appropriation. So there so I think you can't remember those days about the appropriation. So this is the net profit for this year. So they have a C note. So they have an process after all of the workings. So net profits will never given in the question. So you have to calculate it through the workings. Then you have to add non-cash and non-operating expenses. Whichever is non-cash and non-operating, they have something other than operating activities, then that is non-cash. Any transaction which is not related with cash, this is non-cash and non-operating. Whenever any work done without cash or bank, that is called non-operating expenses. So here it is some kind of example. First one is depreciation on fixed asset. Second one, loss on sale of fixed asset. Then goodwill written off, preliminary expenses written off, and bad debt written off. Interest on loan and interest on debenture. So, and discount on issue of share, debenture written off. This is the example. After practicing the format, you will easily understand whatever is relating with non-cash and non-operating expenses. You can easily identify that. As an example, depreciation on fixed asset. Depreciation, you can never get the loss of your machinery or fixed asset. Suppose you have a machinery, so you are using that day by day, and once it get the power of work is losing day by day. So uh, at that point there no depreciation, so depreciation will be charged. So there haven't not clearly any kind of loss of money can hand over to you or others. So at this situation there haven't loss but you can't see, so this is invisible loss. So this is not relatable with cash, and this is the depreciation. In as an example of the second one, that is you have a car. So you have sold this car. When you have purchased that, then it was costing rupees 10 lakh, and now you are sold that car after using 5 years, that is valued rupees 3 lakh. So but after the calculation with through depreciation, your car valuing today at now is 5 lakh, but you have sold it in 3 lakh, so there have a loss of rupees 2 lakh. So this is the loss of rupees 2 lakh you can see through your calculation, through your money transaction, but this is the loss. So this is all kind of examples. I will giving more example in the next problems, and there have an item, some kind of item whichever is going to be less, that is non-cash and non-operating incomes. So the first one is profit on sale of fixed asset. Profit on sale of, in the non-cash and non-operating expenses, there are an example that loss on sale of fixed asset, and now non-cash and non-operating incomes whichever is going to be lost, that is profit on sale of fixed asset. So profit on sale of fixed asset, profit on sale. So suppose you have a car which you have been bought 5 years ago, then it was valued rupees 10 lakh, and now you have sold that car in rupees 5 lakh, but after charging the depreciation, this car valuing today at now is 3 lakh. So there I have an example of rupees 2 lakh. So there I have an example rupees 2 lakh. So sorry, there have been loss, there have been profit of rupees 2 lakh. So you can relate the difference between non-cash and non-operating expenses. At the first example, you can understand there have been loss of rupees 2 lakh, and there have been profit of rupees 2 lakh. So both of them loss and profit, but you can't still see that, you can feel that. So this is the thing we subheading under that non-cash and non-operating income or expenses. And then comes to the next point, that is called after adding and less the net profit, so we can get operating profit before working capital changes. So you know what is the valuing of the procedure valuing of working capital. This is working capital means current asset minus current liability, and we will calculate this current asset and current liability. First one is decrease of current asset. You know that the cash flow statement carrying 2 years information. So how many times the current asset is going to be valued more, and how many times it going to be valuing less. So this is the proper example. When we'll getting an example, then I'll explain all about that. So then come to the next point, that is cash flow from investing activities. Investing activity means any kind of activities whichever your company or you have done before. So number one is sale of fixed asset. If you have a company, then it have to purchase some fixed asset. So and once a time you have to exchange or sold it. So this is the sale of fixed asset. And the sale of investment, you have an investment in multiple companies, so multiple companies in government companies, public companies, or even in bank. So if you sold your investment to other person or other company, then you have an you should have a profit or loss. So this is the sale of investment. And dividend received on investment, you have a fixed deposit in SBI, so you are getting return after 10 years. So this is the interest from bank. And if you have purchased share of any suppose ITC company, so after the 10 years they are giving you bonus share and premium, so it is your dividend from ITC limited. And then come to the next point, that is repayment of loan given to third party. So it is not necessary in this cash flow statement. Repayment of loan given to third party, there have another chapter to understand. So for that chapter you have to do Bcom. So this is not necessary in Bcom, so I'm not describing that today at now. Then you have to less the purchase things. At first you are adding that the sell things, whichever the fixed asset or investment you have, if you sold that, then you have to add the selling price, and then you have to deduct the purchase of fixed asset and purchase of any kind of asset. So you have to deduct that all of the adding of selling value. Then if it comes after the adding and lessing, if they have a negative value, then this is called cash used in investing activities. And if they have a positive value, then it will be called cash flow from investing activities. Okay. And then come to the final point, that is financing activities. This is the collection of capital and loss of capital. If you're having a company, so you have to collect your capital in every year. So this is the issue of equity share, issue of debenture, introduction to capital, loan taken. However you are arranged your capital, all of the sources will be added here. And then the redemption of preference share, the loss of capital. So you have to deduct all of the loss of capital from the sources of capital. Then after all of that, you will get increase or decrease of cash and cash equivalent. So whenever it will come, you have to add with that opening balance of cash and cash equivalent. This will given in your question, and after adding that, you can get closing cash of cash and cash equivalent. At first, to becoming with this information, you have to do some laser option through the adjustment. So yesterday I sent this question. I hope you write it down, so you can see. Yeah. So this is the balance sheet of 2 years. One is 2018 and another one is 2019. So this is equities and liabilities and assets, and there have some information, all of this. So here it is, additional information. This is all about this problem. This is all about the description of this question. So additional information. First one is income tax provided during the year. This is 2,20,000. Okay. Dividend of rupees 4 lakh was paid during the year ended 31st March 2019. Then company sold some investment at a profit of rupees 40,000 which was credited to capital reserve. Okay, and then during the year company purchased machinery for rupees 9 lakh. The company paid 5 lakh in cash and issued 40,000 equity share at the rate of rupees 10 each. And then number 5, there was no sale of machinery during the year. Okay, and then 6, depreciation written off on land and building 80,000, and the last one is ignore corporate dividend tax. Okay, so prepare a cash flow statement for the year ended 31st March 2019 as per S3. Okay, so now we have to draw some ledger accounts. So first is share capital, equity share capital. So equity share capital, we can see that at the end of the 2018 there have been capital of 40 lakh, and at the end of the 31st March 2019 it was 50 lakhs. So there have been so we can see easily the 10 lakh more than capital has been issued on before the day of 31st March 2019. So again reserve and surplus. So there have been no capital reserve at the end of the first year, but at the end of the second year we can see the 40,000 capital reserve, and general reserve at the end of the first year was 10 lakh, and at the end of the next year that is 2 lakh. More than 2 lakh we can get general reserve from profit and loss. And the surplus means profit and loss. First year it was 6 lakh, and then next year it is 7 lakh 20,000. Okay, and then non-current liability. So if they are having any kind of element having a increase or decrease matter, will do that account. So equity share capital, I am marking that. Which one I have to draw the ledger account. So at now I am marking that. So that is first one is equity share capital, second one is capital reserve, next is general reserve. We will never draw this one, profit and loss. So we will never draw. Please remember, I am marking that through the rating. We will never making ledger of profit and loss. Okay, never. And then comes to the next one is long-term borrowings, that is loan. So at the end of the first year it was 20 lakh, and at the end of the next year it is 16 lakhs. So there have been repayment of loan that had been paid of 4 lakh. So and we also need to do that ledger of this item. And then comes to the next that is current liability, and we'll never gonna be do that the current liabilities. We'll never do any kind of ledger posting of current liabilities except that one, short-term provision. If there have been provision for tax and proposed dividend, we will definitely do that. We'll definitely draw the ledger posting of this element. Where it is? Just a minute. So we'll ever do that ledger posting of this proposed dividend and provision for tax. Okay, so how many ledger posting will be drawn through liability? That is number 1, number 2, number 3, number 4, number 5 and number 6. Okay, 6 already have been marked. And next comes to the next in the heading of the asset side, we can see there have been loss of land and building. At the end of the first year, it was 20 lakh, and at the end of the next year it is 19 lakh 20,000. Okay, so here it is. And machinery have also have a treatment. So, and then comes to non-current investment. Okay, non-current investment, and then nothing. And here it is comes to again that we'll never gonna be do any kind of ledger posting. We'll never gonna be do any kind of ledger posting of current asset. Okay, you have to always remember that. Okay. So let's start it. Get prepared. So we'll draw the ledger posting. So this is all of the ledger account. So I have marked that. So number 1, number 2, number 3, number 4, number 5, number 6, and then it comes to number 7, number 8, and number 9. This is then 9 times we have draw this ledger posting account. And first one we can say that is equity share capital. So at the end, so 31st March 2018, it was 40 lakh, and at the end of the next year it is 50 lakh. So now our opening balance is by balance, because you know capital is the liability, and liability always credit balance. So the opening balance will always be posted in the credit side of capital. So by balance BD, that is 40 lakh, and you can see easily that 40 lakh. And at the end of the year, that is to balance CD, it is 50 lakh. Okay. Then we need to read this additional information. If there have been any kind of information regarding about capitals, so we have to read that carefully. So that is number 1 is income tax. It is not related with capital. Now then comes to dividend, not related with capital, and then investment, it is not related with the capital, and then comes to the additional information number 4, that is during the year company purchased machinery for 9 lakh. Company purchased machinery for 9 lakh. The company paid rupees 5 lakh in cash and issued 40,000 equity share of rupees 10 each. Okay, so company issued 4 lakh share capital to purchase a machinery. So we'll post like that: buy machinery account, buy machinery account, that is 40,000 multiply with 10, that is 4 lakh. Okay, and in this debit side of machinery we will posted that 2 equity share capital. That is 4 lakh. Okay, I think you know the process of contra ledger posting. So at the end of the year, that is 50 lakh, and we have already got 44 lakhs. So how many share company have issued to the public? So 50 lakh, and at the credit side it is 50 lakh. So the balancing figure is 50 lakh plus 40 lakh and 4 lakh. That comes to 6 lakh. 6 lakh. 6 lakh. So what is this 6 lakh? 6 lakhs is issued to the customers differently. So bank mean issue of new share to customer. Okay, then comes to the next point, that is capital reserve. You know, this is also a liability, and liability start with credit balance. So opening balance is by balance BD. So you can see that capital reserve opening balance, I don't know, it's not given, but the closing balance is 40,000 to balance CD. That is 40,000. And now we'll find any information about capital reserve. Is it given in the information or not? That is, first one is income tax. This is not related. Then dividend not related. And here in the additional information number 3, the company sold some investment at a profit of rupees 40,000, which was credited to capital reserve. Oh, this is the information of capital reserve transaction. Okay, so company sold some investment at a profit of 40,000, which was credited to capital reserve. So company have gained some profit that is valuing 40,000. This will credited to capital reserve. So here it is by investment, that is 40,000. This is I'm writing it down as an exclamation: profit on sale of investment. And in the debit side of the investment, we are making this contra, that is to capital reserve, allowing 40,000. This is not necessary to write it down every time, but this is first time you are going to be done any cash flow statement. So I am explaining as much as I can is to having a good explanation to you. That is capital reserve, and then comes to the next one, that is General reserve is also a liability, and the opening balance of liabilities start from credit side. So general reserve that is valuing opening balance 10 lakh and closing balance 12 lakh. Opening balance 10 lakh, buy balance BD 10 lakh, sorry, 10 lakh, and closing balance to balance CD, that is 12 lakh. Okay, now we'll check it out, any kind of information which is given in additional information or not. So that is general reserve. So we have already done that one, and general reserve, no, they have no information about general reserve. So we'll transfer the value of general reserve in the profit and loss. So by profit and loss, we'll transfer the excess value of general reserve, that is 12 lakh and 10 lakh. So this is balancing figure is 2 lakh. 2 lakh will transfer in profit and loss account. Okay. And then comes to the next one, that is long-term borrowings. So by balance BD, you know, if you have taken any loan, then it called liability. So liability start from credit balance, that is by balance BD, long-term borrowings. Here it is. Long-term borrowing opening balance is 20 lakh and closing balance is 60 lakh. So opening balance 20 lakh and closing balance 16 lakh. So 4 lakh repayment. So 4 lakh have been repaid to the source from where we have taken this loan. So that is to bank, and we'll explaining here that repayment of loan. Okay, that is 4 lakh. Okay, long-term borrowings been done. Then comes to the next one, that is proposed dividend. So proposed dividend, the opening balance of proposed dividend is, opening balance is 4 lakh, closing balance is 5 lakh. So at first write it down. By balance BD, $4 lakh. And then to balance CD, that is 5 lakh. Okay. So I will find at now if there have any kind of information about the proposed dividend. So first one is related to income tax, and then next one is dividend of rupees 4 lakh was paid during the year ended 31st March 2019. Okay. So bolche so yes. So here you can see that is 4 lakh. 4 lakh the dividend paid during the year. So if you paid any kind of dividend during the year, that is dividend paid. The journal entry is dividend to bank. So dividend to bank, so this is the account of dividend, and dividend to bank means to bank. This is posting here, repayment of dividend, sorry, dividend paid during the year. Listen very carefully, you have to write it down full of the question, so then you can understand all of the additional information of what is really meaning. Okay, dividend paid during the year, that is 40,000, and 5,40,000, it is the total valuing. It will also write it down in the credit side of proposed dividend. So now you can say 5,40,000. So rest of the balance will transfer to profit and loss. That is transfer to transfer to profit and loss. Okay, that is 1,40,000, the balancing figure. Okay, then come to the next one, that is provision for taxation. Provision for taxation, that is the credit balance, opening balance. Provision for taxation, opening balance 2 lakh and the closing balance is 2,40,000. So opening balance 2 lakhs and the closing balance 2,40,000. And now we'll find any information related with tax. We have done the dividend part, and then comes to the first additional information, that is income tax paid during the year, that is 2,20,000. Okay, so to bank, income tax paid, so the journal is in income tax to bank. So now we can see this is the account of tax, and the journal is income tax to bank. So tax to bank, that is valuing is 2,20,000, and the total valuing is 4,60,000. So the balancing figure will write down as a profit and loss, transferring the value of provision for tax in profit and loss account. Okay, so all about the information and element of liability have been done, and then comes to the asset. First one, that is land and building. So opening balance of land and building is 20 lakh and closing balance is 90,20,000. So opening balance of land and building to bank to balance BD, that is 20 lakh. Because of this is the asset, and assets balance start from the debit side, so the opening balance write it down at the debit side, and by balance series I'll find any kind of information. We'll do after completing one ledger posting, we'll find the next one information. What about the information related with this account? So we'll find in the in the additional information. Okay, then we'll do whatever we have to do in next. Okay, so land and building.